Hey folks, Dan Frio here, the rate update. Today is April 15th, 2021, tax day. Not this year, we got another month to wait, guys. But I'm gonna show you how in this, I'm gonna go over rates here at the end, but I have a short little caption on how I was able to refinance my house and get $50,000 out for free. I'm gonna show you how. Don't go away, we'll be right back. Okay, so let me give you the backdrop on what happened in my house. Me, the dummy that I am, I actually, in this last spring, I pulled the plug on my sump pump, or the alarm on my sump pump, because it was driving me nuts because we had a lot of rain and it kept going off, so the alarm would go off on my sump pump. So it was driving me nuts, so I unplugged it. Well, needless to say, a couple months later, I get home and my wife's like, "Hey Dan, downstairs looks like there might be some water down there." So I walk down there and step on the carpet and squish. The whole basement flooded because the sump pump stopped working, backed up, and because I unplugged the alarm, I wasn't aware of it, so my whole basement got flooded. I have a full finished basement. I'm not bragging, there's a point here. So I had insurance. The insurance covered 10 grand. Well, full finished basement, I don't know of you out there that have a full finished basement, but if you went to do it, it's probably gonna be about $40,000 or $50,000 just to repair it. It's gonna cost a lot of money to rip out the whole thing. Well, I had $10,000 in insurance, so I used that money to gut it. Now I have a gutted basement, but no basement that's finished. So I'm like, well, how can I do this? Because I really don't have 50 grand just sitting aside to write a check and do this. So I'm like, wonder if I financed it. Well, I procrastinated on my mortgage rate for years because I was at 5.375. And again, don't yell, because I now yell at you guys saying, where you been this whole time? I'm like that home repair guy that doesn't work, it works on everybody else's house but their own. So yeah, so it kind of forced me into looking at, well, if I refinance, what would the numbers look like? You'll be amazed. Let me go through the numbers, and I had to write them down because I'm like, this doesn't make any sense, but it made sense at the time. Now, I don't know why I didn't share this with you guys before. So the last time I did the loan, let me show you the numbers behind this whole thing, and I refinanced already. So these are factual numbers. We go into, where's my calculator here for payments? Right here, and you can go. I plugged in my loan. My original loan amount about 10 years ago was $425,000. 30-year term, 5.375, and it was actually a loan that had PMI. Okay, so when I go over my payment's $2,379.88, principal and interest, plus I had $283 in PMI. So my payment is $2,663. That's what it used to be. Okay, 10 years ago. So when I refinanced, I went down here and my balance at the time that I refinanced, because I took it out 10 years ago, was $349,000. Okay, gives you the number. Here, let me scroll up a little bit more. Right here, okay, after 10 years, my balance would have been that. Okay, but I needed 50 grand. So I refinanced onto a 15-year term, okay? And so I owed, when I refinanced, the $349, and I refinanced 50,000 into it, so I have 400,000. And again, remember, my total payment was $2,663 because I had PMI on there. I did a 15-year term at 2.375. What is my payment? $2,643. My old payment was $2,663. I had a 30-year term and I was in it for 10 years. So I technically had 20 years remaining on my current mortgage. I refinanced, took out $50,000, and my payment actually is the same. But remember, I was in the loan for 10 years. So I had 20 years remaining. The new loan is for 15 years. So I'm saving 5 years of payments at $2,643 a month. Not only did I get my 50 grand, I'm paying off the house 2 years early, so there's 24 months of $2,643 that I do not have to pay any more. So $2,643 times 5 years, 60 payments, $158,000 I'm saving on top of it, on top of getting the $50,000. So recap, let me explain this to you again. My mortgage payment previously was $2,663. I refinanced after 10 years I was in the house. pulled out $50,000 on a 15-year term. So I'll pay off my house 5 years early, okay, with the same payment. So I'm saving 5 years of payments plus getting $50,000 in return. That 5 years of payments is 5 years times 12 payments is 60 payments I'm going to save of $2,663. I save $160,000 plus I got $50,000. Guys, I can't explain it any better than that. So if you're in an FHA loan, you're in a loan with PMI, you're in a rate that's over 4.5%, let's look at either doing a few things: cashing out, paying off credit cards, cashing out, finishing that basement that your wife is driving you nuts about. You've been in the house for the past year and it's like, oh my God, the walls are coming in. I need a new kitchen. I need a new bathroom. I need whatever. This might be a way to do that for free. So that's the take today. So now let's go on to what are rates doing today. So let's jump into that. All right, headlines are mortgage rates fall quickly to lowest levels in weeks. Guys, I told you this was going to happen. I didn't freak out a couple weeks ago. So let's get on to what the market's doing. MBSs right now are up 25. What does that mean, guys? What's it mean? Up is what? Up is up means lower rates. So as this price goes up, mortgage rates come down. If this number was down, mortgage rates would go up. 25, nice move. Nice move. Okay, now let's check the technicals that we've been talking about for the last several weeks. So here's what we got. Let's recap all our technicals. These lines that go across here, those are called Fibonacci levels. They create resistance levels, or should create resistance levels. So when things start to move, if you could track, everybody tracks, when they're tracking stocks, they're tracking any numbers. They use charting like this, and they use Fibonacci levels and moving averages. So when we do that, these are our Fibonacci levels. Think of those as bumpers. So when anything's trading, when the numbers are trading or whatever, you should hit these lines and basically be resisted, and you should stay in these lines, okay? Well, you could see back in February to now, or to the end of March, we were blowing through them. We were blowing through all these technicals, the Fibonacci levels. They had no resistance to us. But then we started stabilizing. And I was like, once we hit in this area here, I was like, okay, guys, the market's starting to calm down. Everybody's starting to relax. Everything will now start to ease back to normalcy. Because what normally happens in stocks, in kind of everything, there's an overreaction. People, when they start jumping in the stocks and they load up, it pushes the price way too high, and then people are like, I didn't mean to pay that much, and then they start selling and so forth. Then it creates an equilibrium. Well, right when we hit in this area, I'm like, okay, cool. We should start seeing a reprieve in the market. What did I say? I said, well, this will create the resistance level here, which it did. And then we started following little micro pieces of this puzzle, which is 25, 50, and 100-day moving averages. Those numbers are reflective right here. Let me clear the lines just to make this simpler for you. Those numbers are represented right here. The brown line is a 25-day moving average. Oh boy, what happened? Is a 25-day moving average. The black line is the 50-day moving average, and the purple line is 100-day moving average. I'm going to get rid of the 200-day moving average, okay? So you can see where we started hitting that and bouncing and stopping and bouncing. So that, to me, even the other day, look, right here, right there, we hit it on the button and stopped. That then validates this line is now a technical marker for a bottom. And we started rallying from there, okay? I missed it because I thought my rally in this market was going to take me kind of in this trajectory here. So now our next resistance level is the 50-day moving average. So if we take that line and we blend it out, where should we be? Okay, so my thought was it was going to take us a couple days, at least till next week, until we would hit the 50-day moving average, okay? Well, it happened faster than we thought. Even the headlines said that. So now the 50-day moving average is our technical on the upward side of things. Now the exciting news is if we break through this and stay above this, then the next technical line is all the way up to here, okay? So remember, why is this important? As this goes up, rates are coming down. We are not locking anybody right now because our technicals are telling us not to. Okay, so that's what's happened in the last quarter in a snapshot of day by day what's happening. What happened throughout the day? Well, let's see. We had a run all the way up through the market through 215, and then we had a sell-off, and then it stabilized right here, which is really cool. See the red candlesticks means there's more sellers than buyers. We then proceeded here, and then we hit 103.5, which is a resistance level, and we stopped. See where that's hitting us? And then we ended the day on a green candlestick, which is an up note, which is great news floating into tomorrow. So as long as these technicals continue through tomorrow, we could have another rally up in the markets. So on the news front today, what happened? Well, initial jobless claims came in good. Everybody thought there was going to be 700,000 new jobless claims, or I'm sorry, initial jobless claims, which is a new, and it was much less. Okay, so now let's get into where is it? Continued jobless claims, and that is basically in line. I'll say that's in line to where we were. The previous was 37.27, and we're at 37.31. No big deal. Not concerned at all with that. Retail sales smoked the numbers. We almost doubled what the expectation was. The previous month was a -3. Now we're at a 9.8. That's a hot number, guys. Hot number. Okay. X autos, everything's still cooking. What's really cooking? Well, hospitality, restaurants, and apparel. People are taking their stimulus checks and going out there and buying stuff. Okay, so that's what's going on with that. Tomorrow we're going to see the health of the housing market. We need more and more housing to start because nobody's selling their houses and there's pent-up demand. So that's great news for that. Now I'm going to go back to my old technicals. Sorry guys, I'm dumping the old format. I just don't like it. It's not as accurate as I'm hoping it would be. So I'm going back to the old format. If you need a customized rate on a 20-year, a 15-year, or whatever, just reach out to me. This is an analytics that I subscribe to Black Knight, and this gives me data throughout the whole country and where rates are. They're only 30-year rates, but I find this much more informative to me as well as my clients and easier to read. Okay, the 30-year conforming, jumbo, FHA, and VA. I don't know why this is spread out like this, but my FHA and VA rates are the same. Okay, so that being that. So that's where we're at right here. Okay, the conforming rate today in this analysis, again, this isn't my rates, is 3.2. It's down 3 basis points from a day ago. The delta means change, so 1 day change. 7-day delta, we're down 8 basis points, and a 4-week delta, we're down 7 basis points. You guys remember when I used to do this chart, this number over here was like 55 basis points, meaning the rates are up a half from where they were, okay, and so forth. So that's where we're at. 3 basis points means, how you break this down is this would be 0.03. 7 basis points, 0.07. So that's where we're at. If you look at where we were a year ago, at this time, we were hovering in the mid to upper 3s, and we're in the mid to low 3s. So it's still great rates, but if you go back in time, as I did, my rate back from 10 years ago was in the 5s. 2 years ago, they were in the high 4s. So there's still a lot of room, and people have pent-up equity in their house like never before. How can you access that and not have to really pay for it? And I explained that at the beginning. So hope you find value in the channel. Please give me a thumbs up, subscribe down below, and hit the bell every time I post a video. You get an alert. How's the best way to reach out to me? Well, who should reach out to me? Well, if you're looking to buy, build, or refinance. You're looking to refinance, finish that basement. You're looking to refinance, put your kids through college. You're looking to refinance, pay off debt, invest, buy a second home, buy a summer home, summer cottage. You could almost get money for free, depending on what your interest rate is. So that's that part of it. How do you reach me? Well, here's what I ask you to do. If you're already in the mortgage process and you got a quote from somebody, email me the quote. I'll give you my email address at the end and the phone number. If you're in a forbearance, you got to reach out because you probably don't know what's going to happen with your forbearance or your mortgage. once it comes to a conclusion. And I don't want you to be surprised by getting a mortgage statement saying that you owe us $20,000. So please be leery there. So how do you reach out to us and find out more about me and my team? Well, it's pretty simple. Go to YouTube and look up The Rate Update with Dan Frio. You're going to find over 800 videos. Help me get to, if you would, if half of you people would just subscribe, we'd blow past our 13,000 subscriber number really fast. So if you would, don't forget to subscribe down below and click the bell. Every time I post a video, you get an alert. How do you reach us? Well, 800 number is one of the best ways to get us. 844-775-LOAN, 844-775-5626. The calendar thing is really doing well for us. You can schedule a 15, 30, or 60-minute appointment with us. It's simple to do. Just go in here, click it. It'll pull up a calendar. It'll show you all the dates and times we have available. Click it, schedule it. You'll get a text, an email, and a call. We'll either do the conference either by Zoom or by phone call, however you deem to do it. If you want to email me questions, your mortgage statement, your mortgage forbearance statement, your loan estimate from another lender, send it to D for Dan, Frio, which is F-R-I-O, at preferredrate.com. We just launched our app. This thing is nuts, crazy, awesome. So if you're looking to get started on a mortgage, you can darn near do the whole process from the palm of your hand. Just click here and it'll launch you to my app. If you're desktop savvy and you want to do it that way, just click the Apply Now button right here. So that is it for today, guys. Thank you so much for watching. God bless. I'll see you tomorrow. Bye-bye.